Okay, this is going to be a very quick video on how anybody for free can trade. We've got our Discord server up and it's running. It's got quite a few people in there. It's a good community going on. Check the link below in the description. Also on TikTok, Twitter, and Insta. So after all that plugging is finished, go to TradingView right here. Get a free account. Doesn't cost anything, and add some indicators, or learn how to find indicators. But these were my favorites. Look, these are all free. There's no reason for nobody to be poor or to not make money. You don't have to be brains of Britain. You just got to understand the strategy. So here on the right, I've got the Nasdaq here. At the moment we're down. You need some simple things. Get a piece of paper or write this down or memorize it. Yellow line, 200 EMA. So you go to indicators, typing moving average. Spell would help. Moving average. There you go. You need this one, by the way. Next, you see there's lovely red and green lines. They are by a guy called Madrid. It's called Madrid Moving Average Ribbon. 24,000 installs is free. The guy's amazing. There's another guy called Chris Moody, CM. Cool stuff he does. 21,000 pivot points. Just go through, have a play. But this one here, this is CM Stochastic. Chris Moody Stochastic. This one here, Divergence Movement Index. Sounds a mouthful. This one, QQE Mod. QQE Mod. At the top. So once you've got all those in your chart, you just need to understand how to actually put it all together and what it all means. The simplest terms are, if you're below the yellow line, the 200 moving average, you only take sells. I'll say it again because so many people ask me this, and it drives me nuts. So simple. Below moving average 200 line, only take sells. Above the moving average line, this way, in this area, you only take buys. Two simple rules. Please write them down. And what you're looking for is, where's the trend going? So I scalp on the 1 minute. So for example, here, it's a bit slow at the moment. We've got the QQQ mod just showing two green things. So I would have bought earlier. So now we've got three. So this is in the small uptrend, but the major trend is down. So basically, I would have bought here. So let's say we bought here, and you can see it's going up. This little red line horizontal here means there's selling pressure. So this could get slammed down or it could burst through. That's an order block. So it's an invisible block of sellers. If it's green, it's an invisible block of buyers. Again, go to indicators, type in order block, it'll do all the same. So you see here as well, you've just got what I call an alligator's jaws just opened up. So that could be the beginning of a new upwards trend. But it also could be the retracement of this. So you see it's going down, it's retracing, it's going down, it's retracing. But then you get into things like, well, you've got a new higher high. So this market is changing. But what you've got to basically look out for is to cross here on the stochastic. So if you basically bought here and sold here, that's all you have to do. You just get those, rinse, repeat, do that all day long. You don't need a job. I don't see, obviously it's not as simple as that. It takes experience, takes practice on a demo account. But these, I've been doing this a long time, these are by far the best indicators, in my opinion. So if you go back here, we've got the green QQE mod. You could have just rode this all the way up, and then as soon as you get the white line appearing, you just close it. Don't be greedy. Don't try and do swing trading. That's what majority of people tell you, and you follow the majority of people, usually ends up failing. Again here, could have waited for the second and just stayed in, rode all this down until you saw the white line, then just get out, and then don't trade. Getting on the second one, ride all this down, get out. Here, stay in, ride all this up until this white line appears. In actual fact, I'm going to keep recording. Let's pretend we're in a trade and we've got in here. Even though this is crossed, it's not coming down. So you see here, it's stayed above this line here. So this stochastic has stayed here, stayed here, stayed here. Then it crossed here, which correlates with that. And what you're looking for between these indicators is correlation. They're doing the same thing. That's what correlation means. So here you have the trend has changed. We go back a bit. You can see it's starting small. That could possibly be that, but also could be a blip. You don't know, but you just get in anyway. That's down at the bottom. That's small. Would be more ideal to get in here. B for buy. Doesn't always work out, but you've got to be in the game to win. If you're not in the game, you're not going to win anything. It's really just this. This is just this is just about probabilities. And what I'm teaching you is very basic technical analysis boiled down into my old kind of simple, stupid version, which I kind of like. Because you can make this way more complicated than it needs to be, and you'll be just like going, what the fuck is going on? I can't understand this. And then you go and get a job at McDonald's or something, which I don't want you to do. Start here, ride the trend up. Well, as you can see, these are moving average lines. So the further away the price, stronger the trend. And see, it's going much more vertical than this, different angle. Big candles, that means it's very, very, very strong. Up, there you go, end of a trend. So you've got the sneaky little white line showing its face. You just get out there. So on this particular one, if you got in here, you wouldn't really have made much of a profit. But again, the next time that happens, it could be this and it could be really big. You just go, oh well, next time, you haven't lost any money, you probably would have made whatever. And you just keep an eye on it. But follow the basic guides, which I said before, below the moving average, the yellow line. Sells only. So don't bother about buying, just look for the sells. So I'm not saying you would sell here. We want to wait for the second one. So maybe if we're still recording, this comes down, that would be good. But yeah, just going back to explaining the directional movement index here, is that basically if the green line's on top, we're in an uptrend. When it crosses and the red line's on top, we're in a downtrend. And you can see that. You got correlation again. Green candles, blue candles, whatever color they are. Up, 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 up. And then this white line just shows you the strength of the momentum. To here, not that strong. Going up, going up, going up. Going flat, going flat, going flat, then going up strong. So here would have been a good place to enter. It's crossed the moving average, which is always be careful. And then you can see when you're right at the top, you think you can keep riding it. You've got a steep decline on the stochastic. It's just looking at this, just practicing. Lots of brokers allow you like 10K on a real market. You can test this out. Have a look in the description. It's like brokers we recommend. Lots of tools. Pop over to the Discord. There's lots of information. There's lots of people you can ask advice. It's really good. I hope that has helped. Anyway, any questions? Whack a comments below. Thank you.